What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 15, April the 28th, 2023. We made some trades today, so let's get into it. So coming into today's session, I wanted to make sure that my goal was to focus on being patient enough to wait for my best setups. And then when I see my best setups, I want to trade them properly. So that was my key focus today. So before we get into the analysis, let's talk about the key levels that we have on the chart today. So this orange line up here represents yesterday's closing price from Thursday, and that price level is 33,929. So let's start our analysis at 8:30 this morning. So we had a news release that had something to do with inflation today. We had the PCE index come out. So anytime you have a news event that has anything to do with inflation, it'll usually always create some type of big move. And that's because inflation is the hot topic in the macro trading environment right now. So anything associated with that will cause volatility. So after this announcement comes out at 8:30, we see prices eventually create a higher low, which we can use to establish a trend line. And then we follow and extend that trend line throughout the rest of the session. And we can see that we had higher low after higher low after higher low after higher low, and then the final touch of this trend line happened at 9:30. So we came back when the market opened, we tagged that trend line one last time, and then we were off to the races for the upside. So we had this swing, created a swing high, we pulled back, created a higher low on this green wick right here. So on the bottom of that wick, I drew my support level, and then on the very next candle, we see prices come back, retest it, and then immediately move away from that level. Now, when prices came back to create this higher low right here, that right there was a perfect entry for me. And I tried to go long right here, but I was literally 2 seconds too late. I put my order at around 33,880 once I saw prices starting to move away, but they never came back and hit 80. They went from 80 to 81 to 82 all the way up through 88 to 890, and then eventually 900, and they never came back to test my entry level where I had my order. So that one I just had to miss it. But to me, I did a good job because rather than chasing the market up and trying to buy at higher prices, I just simply said, okay, I had my entry at the best price and I missed it by 1 second. I'm not mad about that. I'm gonna let the market do what it does, and then when I get another opportunity and a clear signal that I'm familiar with, that's when I'll hop into the market. So that led us up to trade number one. So right before we got to trade number one, look at this candle right here. On this candle, we pushed up past yesterday's closing price, and we were able to close above that level at 33,929. And then look at the volume. The volume was much higher than what it had been previously. So that's telling us that we had to push through yesterday's close on strong momentum. Now also take a note of how we started a continuous bull spike. So we had 1, 2, 3, 4 candles that were all green within an uptrend. So that right there is one of my favorite setups. So let's go ahead and take a look at our notes, and let's break down exactly what I was looking for when it came to this continuous bull spike. So when it comes to a spike like that, first of all, you want to make sure that the overall trend is in line with the direction that the spike is moving. So for us, that was true. We traded a bull spike during the uptrend. So check mark on that criteria. The next criteria that you want to look for is you want to look for wicks on each one of the green candles that are forming. So on this setup, let's zoom in. This actually happened today in the pre-market at 5 o'clock. So we had a double bottom that led to a higher low and then a continuous bull spike. So notice how on each one of these candles, this one, and this one, you all had wicks on each one of them, right? So the wick is what's going to be your pullback opportunity, because the trend is so strong that you're not going to have a multi-candle pullback that creates a clearly obvious swing low. Instead, the pullback is going to be on the candle where the candle will move up and be green completely, but then close away from the highs of that candle. So once it closes away from the highs of the candle and creates a wick, you go long immediately after the close of a candle that has a wick, and you hold it for whatever your target may be. So on this specific example, you had an opportunity to get in on the close of this candle once that wick formed. And even if you miss that opportunity on the next candle, look at what happened. It opened not too far away from the previous candle, but look at what it did. It pushed down and it was red for at least a small moment in time. So maybe you had an extra 10 to 15 seconds to get into that trade. And notice how even though it might have been red for a couple of seconds, look at where it came back to. It came back to the same price level that you would have went long from if you went long on the close of this candle. So that was two opportunities right there. And that's usually how bull spikes work. So if we go to the example that we were looking at from yesterday's pre-market session, let's read these notes because this is a perfect synopsis. Also take note of how candles 1, 2, and 6, they all close off of their highs. And a close away from the candle extreme will usually be the only pullback during a bull spike. So notice how candles 1, 2, and 6, they were all completely green candles at one point in time, but they pulled away from their highs and closed near the midpoint for those candles. So you had an opportunity to go long, not on candle number 1 because the bull spike wasn't established. So I would say candle 2 or candle 6 was probably your best opportunity. So on those candles 2 and 6, prices closed away from their highest point and closed near the mid range. And once they close like that, you go long immediately after the close and hold your trade until you hit your scalp target or whatever your profit target may be. So that's the same mindset that I had going into the trade that I took at trade number 1 today, because I saw 1, 2, 3 candles. We pushed past yesterday's closing price on high momentum. It gave us that wick. So immediately after that candle closed, I went long on trade number 1 and was able to take prices up to my scalp target, and I did pretty well on that trade. So I followed my plan perfectly. So then after trade 1, we see prices create a swing high at around 970. We pull all the way back to retest yesterday's closing price. So now yesterday's closing price used to be resistance. Now it's switched up and it's acting as support. So once they got back down to yesterday's close, they immediately moved up off of it, created a higher low, which I drew support from. And then that led me to trade 2. So for trade 2, let's read the note. I went long after yesterday's closing price was respected. Prices then created another higher low after coming out of this pullback. So once they created that higher low, that actually happened to touch the bottom of the channel, so that's another bull signal. Once they started to move away from support, that's where I went long. I identified my key level as being 950, and the reason I used that level was because I like to use the whole numbers theory. So the whole numbers theory basically says that the 100 levels, the 50 levels, and all of the quarter levels will play some type of role in the market depending on the market scenario. So based on what I saw today, I said, okay, now that we've created a higher low and moved away from it, if we can get above 950 and stay above 950, I'll go long in expectation of prices continuing back up to test this previous swing high that we established a few minutes ago. So that's what my rationale was and my thinking was for trade number 2. Once prices got back above 50, went long, and I held it all the way back up to the top of structure. And that's where I called it a day for today's session. So overall, man, today was pretty good. But before I get into a synopsis of today's session, I want to talk about the similarities that we've seen in the market throughout this entire week. So notice how today's session, we started off with a higher low that established a bull trend line that led to higher prices for the majority, if not the entirety of that session that we were trading. That's what happened today. Now, this right here is Thursday's chart. Notice how on Thursday we had the exact same scenario. At the beginning, when the market opened, we created a higher low, bullish trend line, and then from that point, we just moved higher for the rest of the day. This was Wednesday. Now, on Wednesday, we did have a downtrend. This was Tuesday. On Tuesday, we had an uptrend. Not the prettiest, but the characteristics were still there. We pushed up off of the open. You could draw a trend line from here to here to here to here. So we had a trend line, and then we had an uptrend that lasted throughout the rest of the day, or at least the rest of that session. So that was Wednesday. This right here was Tuesday. Well, excuse me, this right here was Monday. Did we skip Tuesday? Now this was okay. Look, I'm getting confused, but y'all know what I mean. Throughout the entire week, for the most part, 4 out of 5 days, we've had the same type of uptrending pattern happen. So that was a very good signal for me today that gave me confidence because I started to see the same setups that I've been seeing all week, and I said, okay, if I see what I'm looking at and I can properly identify it, now the only thing I have to do is trade it properly and trade it the right way. So I think that's why it's very important to always go back and study not only how the market forms on that specific day, but study how that day relates to days that have happened in the past, within that week, within that month, and within that quarter, so you can have a better and deeper understanding of the overall market movement, because that could help you and give you more confidence to take the trades in that specific session on that day, like it helped me out today. So overall, I would say today was a very good day for me. I followed my plan to the T. Everything that was in my trading plan, I did it. Everything that was outside of my plan, I didn't do it. I had a chance and an opportunity to chase prices when I missed my entry right here at 940, but I had enough discipline to not do it, and I'm very proud of that. Now, I don't want to get complacent. I know I had a good week, but I want to continue working hard. So, my goal for this weekend's back testing session is to just focus, really, really focus hard on being patient enough for my best setups and only trading my best setups and trading those setups properly. So, that's my goal for this weekend's practice session. Um, I think on Monday I'll see you guys at 9:30. That'll be what, day number 16.